next 4th of July. It's hard to believe, but 2020 is more than halfway over, and it's a year we'll never forget. It's a year that no one could have ever predicted. So let me just take a minute or two to comment on the markets and reflecting back in the past 6 months. January, February started off very good. The market was doing well, and then the pandemic came along, and the markets went really into a free fall. In fact, we saw a very steep decline from top to bottom of 35%, so that we ended the quarter with a negative return that was far worse than any other quarter we've ever seen in stock market history. Thankfully, it was followed by a good second quarter. In fact, this last quarter had the best returns going back to 1938. So, what caused this? Well, we know the selling, there was not a lot of data. People anticipated the very worst scenarios. And so when the market hit the bottom, investors felt that market was oversold. And at that time, you had the Federal Reserve and also legislation that brought in $8, $9, $10 trillion of stimulus into the economy. And that was very powerful. In the meantime, we were still getting a lot of headline news that was very negative. But I think the market was, as always is, forward-looking. And so they were sort of looking over the valley into the next peak. And we saw the market, continually move higher, of course, with some setbacks. But for the most part, we were well off those lows that we saw in late March. Now going forward, I think we have to look at things that we have to be cautious about and things that give us encouragement. As far as being cautious, we don't know if there's ever going to be a vaccine developed to combat the coronavirus. We don't know if we're ever going to see any treatments. Furthermore, now we have tensions in China, not only with trade, but its relations. That's not good for the market. And then we also have the Eurozone dealing with Brexit. And so there's a lot going on that tells us we should be cautious. On the other hand, if we want to look at the more positive side, there is encouragement because as far as vaccines go, we're hearing more and more every week. It looks like there is a possibility, a rather good possibility, that we might actually see one by the end of December. And then the pharmaceutical companies are also reporting that their treatments are moving along into the various phases. So that is really a positive. And if we came up with a vaccine, it would be positive for the market. Now, in addition, we have, as I said, the Federal Reserve and Congress acted very quickly. They responded with a lot of money to stimulate the economy. Now we're hearing in the past few weeks that there's going to be more stimulus. This, again, is going to be very positive for the market. Now, whether you like that or not, it's going to be good. So we have the stock market, which is, inching back, not quite to where it was, but we're not too far from there. Growth stocks are actually positive for the year, many of the growth stocks. But as we look forward, I think stocks, it's fair to say, can still be viewed as attractive investment vehicles because when you compare stocks to other asset classes, like bonds or real estate or money markets, they're attractive. And so I think that we will see the market continue to move higher with, unfortunately, a lot of volatility, especially from this point to the election. It's interesting, but anytime we've seen a quarter in which we had a 15% return, we've seen that 8 times, and each and every time we've seen the next quarter actually be positive. And in fact, if you go out 2 quarters, we've seen that second quarter also be positive. So I think in the short term, we could see the market move higher. And I do think if you're looking out a couple of years, the market will be higher. So, what we don't know is what creating the opportunity, because people are going to wait until we have all the data and we see that everything has been good. By then, it'll be too late. One thing that has been very surprising are the jobs. The job numbers have been really good. The manufacturing numbers that have been reported, in the past 3-4 weeks have been very positive, much better than anyone would have anticipated. We're in a recession, but based on these numbers, we could easily be out of recession or in the near term get out of recession. Now, it doesn't mean the problems are over, but moving forward, we will continue to probably see positive data, and that will drive the markets. We hope that you guys have a good summer. As always, think long term when it comes to the stock market. Be patient, have a plan, make sure your allocation is consistent with your risk tolerance. But overall, we'll have to wait and see what happens. A lot of uncertainties. There are also some opportunities. So if you need anything in the meantime, feel free to reach out to us. Have a great summer and talk to you soon.